doesn't really come unexpected, I have to say. I mean, the magnitude was, of course, quite huge, I have to admit, but I think it's clearly too early to call for a kind of rotation. We have seen this before, and if I look, for example, at the performance of overall markets, and then, of course, in particular tech stocks in August, which was the best in decades, I think it doesn't really come as a surprise that now investors also look to book some profits. So we have to see if this is just a short-term blip like before, or this is now the turning point of a rotation, which we don't think so.
But at what point would you be a buyer? Because that seems to be the consensus opinion that we've been getting. I mean, we've pretty much spoken to all analysts through the show over the course of the last 3 hours, getting a sense for them on what they are going to be doing with the sell-off. And it seems like the broad view is this is a buy on dips, downside adjustment. Would you agree?
We would agree to this. We still think technology and also healthcare, which we consider as quality growth sectors, are still the sectors to own. I think when you look at, especially this year, not many sectors could provide some positive earnings, and hence we think, especially during the pandemic, and maybe this is lasting a little bit longer than many people thought, this is clearly a positive for these sectors, and hence we would still recommend our clients, if they haven't already invested in these sectors, to use this kind of dips to increase their allocations there.
And I guess the underlying question I have is, at what point do you think investors will start to pay more attention to the fundamentals and valuation than just the technicals or some of the momentum plays? Because that's something that our previous guest raised. It's something that Mohamed El-Erian has raised over at Allianz. And given the backdrop we have from the Federal Reserve, it does complicate this picture, doesn't it?
Absolutely. I mean, when you talk about value, it comes directly into my mind. Then, of course, financials play quite a big role. But given now, as you hinted to, the Fed's decision last week at Jackson Hole now to abandon their previous inflation target, now moving to a more average one, which means something we have been saying many times before, and now it is even further supported with this Fed action, that the Fed might keep interest rate low for longer. Some are even saying forever, but at this stage we would say low for longer, something we have been saying for the ECB for some time. And hence, of course, it will be a tough environment for financials, in particular banks here, to make decent earnings. And of course, the pandemic is still, in a sense, around us, that it keeps travel and leisure at bay, and hence not many sectors are currently attracting investors' mind. So we would think here a lot of investors will use then this dip to rebuild positions in technology and healthcare.